Anybody want some free coconuts? Still got a bunch of them laying on the street over here from the other day when we had this crazy wind and rainstorm. And I'm gonna have to walk in the middle of the street because the sidewalks are kind of flooded in a lot of areas still. So yeah, we're walking on the street today. Now, in case anybody's wondering why I have all these bandages and stitches, just go check yesterday's video. I explained it all in there, but don't worry, I'm okay. But I'm gonna have these stitches for a while, so you're gonna have to get used to it for a couple weeks. Now, when it comes to condos, a lot of these old condos are having problems, guys, when it comes to being able to keep their insurance, when it comes to being able to keep up with all the expenses involved and all of this. And you know, it's funny because since we're walking through a flooded neighborhood right now, this kind of just is the perfect timing to talk about this, because everybody thinks, oh, you have all these problems with condos, it's a money trap and all of this. Well, obviously there's a lot of problems with living in a house too, as you can see. You know, you have all these flooding issues here in Florida that come up constantly, and it's not getting any better, it's getting worse. Every time I see these floods, it seems like it's worse than the last one. But when it comes to condos, about 30% of condo buildings that were constructed between the 1960s and the 1990s haven't replaced their roofs or have other structural issues. They're facing difficulties when it's coming to getting full coverage insurance that are required by lenders. And a lot of lenders don't want to give a loan on properties like this. Now, here in Florida, state law requires condo associations to use their best effort, that's in quotes, like whatever that might be, to obtain and maintain master policies that cover the exteriors of their buildings, plumbing and electrical systems, and all common areas of the condominium complex. And those policies are separate from individual homeowner policies that unit owners buy to protect the fixtures inside their units, such as bathroom and kitchen fixtures, the floor, the wall, the ceiling. I'm not gonna go down there because it's way too noisy. But you can see they're still like taking care of all these branches that fell down and everything here. It's a mess, guys. Basically like a hurricane came through. As most of you know, insurance has been exploding, especially here in Florida. And now, in order to get insurance for these buildings, the increases have gone up anywhere between 25 and 70%. And that is just on the light side of things, if you ask me, because my building went up 100% last year, guys. And I don't even know what it's gonna go up to in 2024, but we'll know very soon. And the big problem now is too many condo buildings are turning to Citizens Insurance for their insurance because nobody else will take them. Literally, the number of buildings that Citizens Insurance covers has increased by 142% from 1,696 buildings to over 4,109 buildings, and that's just between June of 2022 through June of 2023. And during this same time, the replacement value for all these buildings has gone up exponentially as well. Actually, far more than the number of policies that Citizens has had to absorb recently, because according to them, the replacement value has gone up by 338% in that same time period, from $15.9 billion to $69.7 billion. And it's not just Citizens that's taking on all these new policies. You have American Coastal Insurance. They're the largest holder of condominium policies throughout the state of Florida. They had 5,224 condo policies at the end of June, which is up from 4,378 from a year ago. So they literally took on 1,000 new buildings in just 1 year. And also, when it comes to condos versus houses, they actually have it a little bit easier when it comes to obtaining insurance when we're talking about the condition of the roof, because so many people that have a roof that's like 10, 15 years old with a house are getting dropped like crazy because they're saying that their house no longer qualifies. But for condos, in 2022, the state legislature made it illegal for insurance companies to deny condos insurance if the roof is less than 15 years old. And also, if it's more than 15 years old and they get an inspection done and it's determined that there's at least 5 years left of life on the roof, then they still have to write the policy even if the roof is over 15 years old. And people who own houses aren't that lucky. But it also means that condo associations that need a roof replacement and still have insurance coverage now need to double time it and get that roof replaced before they lose their coverage. Which, what does that mean? It means more expenses for the building. That's likely going to come in the form of a special assessment or higher HOA dues, or possibly both. Here we have another house for sale, and surprise, surprise, it's another flip. 4-bedroom, 3-bath. They had it listed at $1.3 million until it went under contract, but they've been trying to sell it since June of 2023, originally asking around $1.7 million, and when they purchased it back in 2021, they only paid $725,000. So yes, once again, they're asking double for this house. It is just unbelievable what's happening out there. Property tax bill, $13,500 a year, and that's based on that $725,000 purchase price. But to make matters worse for condos, Fannie Mae and Freddie Mac also have strict guidelines when it comes to which loans they'll write and which ones they won't, which can also make it hard to sell condos that don't have the appropriate amount of reserves and financials. So one of the other problems with this is that condos are typically supposed to carry full replacement coverage for their roof, okay? But a lot of them can no longer afford it, so instead they're settling for actual cash value coverage. Freddie Mac and Fannie Mae require full replacement coverage for loans that they back. So what this does is it essentially makes it harder for people who are trying to obtain conventional financing to buy condos that are not in good shape. And honestly, I don't think that's such a bad thing, because in a way, this kind of weeds out the bad buildings, guys. Like, you know, these buildings that have way too much deferred maintenance and haven't been taking care of themselves for too many years deserve to be priced lower, okay? That's just the reality. Just like buying one of these old houses, you know, that have 50 years of deferred maintenance that you have to take care of, like that one, you know? And who knows how much work needs to go into that. Is it fair to pay the same price for that house as another one that was fully remodeled 5 years ago? No. So in some ways, these buildings that are not doing a good job with their maintenance, or traditionally haven't in the past, are going to be punished by this severely, in the sense that it's going to close doors to a certain pool of buyers that are looking to get financing unless they're looking to pay cash. And it's also going to make it very likely that those people are going to want to have a discount off the purchase price. But to make matters worse, ever since we had the condo collapse here in Surfside, Fannie Mae and Freddie Mac made their condo lending standards even stricter, because they want to see full detailed reports now on the structural integrity of the building before agreeing to loan on them. So right off the bat, as a buyer, that can give you a couple of huge red flags to look for when you're going to buy a condo, because if it's all cash, for example, if all the units in the building are only closing for cash, or the seller's only willing to accept cash, this can be a huge red flag, because it could mean that the building's not eligible for financing and has a lot of skeletons in the closet. They also need to provide documents now that disclose the status of special assessments, any type of structural or mechanical inspection reports that were conducted over the past 3 years. Now, if the building's deemed to be in disrepair or needs too many repairs, then obviously Fannie Mae or Freddie Mac can easily deny the loan. And the crazy thing is, they have their own blacklist on which properties are not currently eligible for financing, but they won't share it with the public, which is kind of doing people a big disservice, because you can save people a ton of time and effort by not shopping at buildings where they can't get a conventional loan. Check this out, guys. It's just amazing the amount of damage that we saw from this storm. These are some pretty big trees that came down here. Crazy stuff. So right now, condo financing has been tougher than it's ever been due to all the stringent guidelines that are coming out with this. But one thing that you can rest easy with, I would say, is that if you're looking at a building and the people are still getting conventional loans in there as of today, then you don't have anything to worry about, most likely, because other lenders have already combed through this and deemed it eligible for financing, as well as probably Fannie Mae or Freddie Mac. Now in South Florida, this is becoming even tougher, because if you live in Broward or Miami-Dade County specifically, you're now being forced to comply with new reserve study guidelines that go into effect no later than December 31st of 2024, which means starting in 2025, all buildings in Broward and Miami-Dade County that are 3 stories or taller need to have full reserve status, guys. And basically what that means is the operating budgets for a lot of these buildings is going to have to explode in order to accommodate this, which also means that the amount of fees that people pay every single month on their monthly HOA fees is likely going to skyrocket. I've shown you guys specific examples of this. This is going to hit a lot of buildings really hard. And this is where everybody's going to be showing their true colors pretty soon, when it's revealed that they have no reserve. They need a roof replacement. They need to have, 5 different special assessments for all the different things that are going on. At the same time, their maintenance fee is going to double or triple. That's going to be a disaster for a lot of buildings. And I think ultimately it's going to lead to a lot of condo buyouts for properties that have been mismanaged for too long, which I will talk about more in a future video. And the reason why this new reserve study requirement is going to hit condos so hard is because in the past, the board could vote to have no reserves for the building and just pass a special assessment when something needs to be done. Well, with this new law, that's no longer going to be possible, and all these buildings that are 3 stories or taller and are in Miami-Dade or Broward County are going to be required to have full reserves. So this is going to really shake up the condo market here, and I also wouldn't be surprised if this provision spreads to other counties across Florida, or maybe even the entire state, guys. This could even become a nationwide thing eventually, because this is going to reveal how many problems certain buildings really have, and it's probably going to scare lenders even more, making it harder and harder for old decrepit buildings to get financing. Here's a real world example of this. This guy named Richard inherited a condo that his mother gave to him when she passed away in Sunrise Lakes, and he had a buyer, but the deal fell apart because the lender learned that the condo building had no wind insurance. So lenders won't approve mortgage loans on buildings that are not insured with the full replacement costs. So Richard actually ended up selling the condo, but he had to get a buyer that was willing to pay all cash, and he had to give a $40,000 discount off the asking price for this. And rightfully so, guys, because when you're buying in a place that doesn't have all their ducks in a row, it should be cheaper than a place that does, right? And so a lot of people have been asking me what I think is going to happen when this hammer drops for all these condos, and I think it's going to play out exactly like we just see right here in this real world example. Places that have not been doing their part in order to maintain the building and keep up with the proper repairs and expenses are going to be selling at a discount, and it could actually raise the prices for buildings that are being maintained properly and don't have any of these issues. Because just like buyers want to have turnkey houses, nobody really wants to remodel anything most of the time. They want to move into a house that's ready to live in. Well, people are also going to want to have condos that aren't going to be going through years and years of different repairs and replacements. That's going to end up being a nightmare for them. And therefore, that could make buildings like that sell at a premium for people who want to have the hassle-free experience of moving into a building that's already well maintained and is already fully funded. And as you guys know, I live in a condo, and that's one reason that I feel good about the condo that I live in, is because we are almost fully funded. We run on partial reserves at our condo. We don't do the no reserve thing at our building, which is why our maintenance fees are so high. And by the end of next year, we're going to be forced to go on to full reserves, and our HOA fees will go up. But luckily, it's not going to go up significantly because the partial reserves amount is already pretty close to how much we would have to pay with the full reserve. So it's not like we're going to get this huge sticker shock of the HOA dues going up tremendously because we have to be on full reserves. But there are other expenses at play here, guys, that are outside of our control, even if you're in a building that has full reserves, like the insurance. Like I mentioned on ours, it doubled last year. What's going to happen this year? I doubt that it's going to double again, but it's likely to go up still. And while we're on this subject of insurance, check this out. Citizens Insurance is ramping up home inspections like no tomorrow because they're trying to figure out how many people can we get rid of, guys. That's basically on their agenda right now, is to get rid of Citizens policyholders because they just have too many. If there were to be any type of tremendous disaster in the state, Citizens could easily run out of money and have to pull assessments across the state. Every taxpayer across the state of Florida will have to make up for it. So back in 2019, Citizens Insurance only conducted 2,200 home inspections, okay? And 4 years later, today in 2023, they're on track to inspect 300,000 homes. That's right. These guys are blowing up their efforts like you wouldn't believe to see who's in compliance with being able to actually get insurance right now. However, the problem is Citizens is doing a lot of these inspections with unlicensed inspectors, and then the reports are being reviewed by licensed inspectors to figure out who's in compliance or not. So right away, that sounds pretty shady to me. And this is not really the standard practice for the industry, because most insurance companies will have a licensed inspector that are well trained to provide a good analysis on your home. But the fact that Citizens is sending out unlicensed inspectors and having the reports reviewed by licensed inspectors, to me, is already a red flag. So technically, Citizens Insurance is not breaking the law, they're saying, but they're not following industry best practices. So basically, they're acting shady. And they talked to this woman in Tampa who actually had to get a Citizens Insurance policy because the cost of her private insurance skyrocketed, which is basically the story of almost everybody who's on Citizens Insurance right now. And so this woman could no longer afford the private insurance and was forced to go on to Citizens. Well, she had to fight an unlicensed inspector's inaccurate report to keep her home. Because of all the inaccuracies on the report, she was at threat of losing her insurance, which ultimately would have made her lose her home, because, like I've told you guys many times before, if you don't have insurance and you have a mortgage, your lender will put something in place called forced place insurance. And it's going to be a lot more expensive than your regular insurance and can push people to the brink in terms of affordability, and they literally won't be able to afford their house anymore if this happens to them. And so that's how this woman could potentially lose her home if this were to happen to her. Now, according to the news channel that actually wrote this story, they said about 62 inspections out of 200,000 so far this year have some sort of errors on them. So that's not too many, but it just goes to show you that when businesses start to cut corners like this, that it can affect real people in a negative way. And that's what I think is interesting, because so many people are like, oh my God, stay away from condos because of all these problems that are developing. But number one, there's ways that you can actually verify that the condo is in good shape by reviewing their budget, reviewing the meeting minutes, and making sure that they have the finances necessary in order to continue going forward without any major special assessments or major increases in the maintenance fees. And the other thing is, guys, people like to avoid places because it has a high HOA fee. That's probably a good sign in today's world, given that places that have a low HOA fee are probably the ones that are cutting the most corners and are going to see the HOA fees rise the most come 2025. And so many people think, well, I'll just run to a house, I'll go live in a house instead. Well, guess what? There's insurance problems with houses too. It's probably going to cost you more to maintain the house than the condo, because you only have your 4 walls to maintain inside the condo, and your insurance costs are definitely going to be higher because you're responsible for insuring the whole thing. Versus with your condo, you only need to have a homeowner's policy that covers just your unit, and then of course the master policy is paid through your HOA dues. So there's definitely pros and cons to both, and I think it's going to be interesting to see how this dynamic plays out once these new condo laws go into effect fully. Like, are they going to delay it? Are they going to push things back past 2025 because so many buildings are going to be in trouble with this? Are they going to loosen the standards in some way? I don't know. It'll be interesting to see what they do. But rest assured, a lot of buildings are going to be in trouble from this. So if you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.